Welcome to Option Trades Today. I'm Tony the Bat Batista from the Bat Cave here at Tasty Live. I've got a trade for you. April 11th, 2024. And don't forget, your taxes are looming if you're paying quarterly on the 15th. That's your public service announcement from the U.S. government. Now, let's take a look at what the market's doing. Even the S&P is down $10.25. NASDAQ up 50. NASDAQ trying to hold the market higher. Russell down $3.30. Let's consider the market unchanged in the Russell and the E-mini S&Ps and the NASDAQ. And the Dow being a little bit weak today, down 250 on a percentage basis, just about 5/8 of a percentage point. Volatility keeping its head up almost 40 cents, signaling maybe a little bit of weakness in the market, which you're kind of seeing ever so slightly. A big tug of war. Bonds, very weak. 115 even they just trading right near their lows of 114.29. Tom's bullish on bonds. They have not been able to catch an uptick, and volatility, as you can see on the right-hand side, here is going higher. Anton did a trade in bonds today on our trades from the research team earlier today. But I'm going to avoid bonds because I'm the world's worst commodity trader, as you can tell from the gold position I put on a couple of weeks ago. Still fighting with that gold now strangle in not forward slash GC, but in GLD, which is up 86 cents, and a meteoric run with a very high implied volatility. But I'm going to sit with it. I don't know if you were following this podcast on Tuesday, but we put a trade on in Costco. It worked out very well. We were able to take a 50% profit in there, and the prior week, Marvell, we did a trade in there that worked out very nice. You can see volatility contracting nicely in there. We were able to take $1 on those two trades. You can always see all those trades on the follow page. Now let's take a look at what's going on here. When you click on the earnings and you go down to the stocks that have earnings, it's really, as I said last week and on Tuesday, it's really all the stocks that we like to trade. So everything basically in the NASDAQ and the S&P that has any kind of power towards this market has earnings looming. But I did see something that we have not seen in quite some time. SPX volatility, or volatility in general in the overall market, has been expanding. Remember, IWM had the highest implied volatility in the market, and it still does. You can see here volatility in IWM has been rallying and going higher too. Already have an IWM position that I'm fighting with, not too much of a loss in there yet, very small. So I'm going to put on a position in SPX. When I put on a position in SPX, I go with a little bit of a directional opinion, and I'm going to fight this volatility expanding right now to 1660 in the overall market and do an omnidirectional, slightly bullish trade, but I've got a little bit of a twist for you here. I like to go to the monthly options. We like to put on trades when there's 40 some odd days to expiration and take them off when there's 21 some odd days till expiration. So that gives us about 2 weeks to keep this trade on. Typically, when we put on a trade, it takes about 2 weeks for the trade to work, unlike the Marvell trade that took less than 2 weeks, and the Costco trade that took only 2 days really to work. Usually they take about 2 weeks to work. I've been very successful with this trade, which means I'll probably be a loser on this trade today. But I'm going to tell you what I'm going to do. I'm going to try to catch a little bit of a falling knife. I don't know. I don't think it's a falling knife, but I'm going to catch a little bit of a worry in the market here. I like to go to around the 20-ish delta option. I did this when the E-mini S&Ps were down around 15 handles, and that was the 49.50 puts here. You can see them with a 19.20 delta. I'm going to buy one of the 49.50 puts. I typically like to go $50 or $100 wide. Let's look at the $50 wide. So I sell two of those. I'm $50 wide on this trade. And then I like to, because it uses so much buying power, I like to define my risk and go $100 wide with my next buy. So I'm going to the 4,800. What am I looking to do here? I'm looking to buy a $50 wide spread and sell a $100 wide spread. 1 to 2 ratio. 1 meaning $50, 100 meaning 2. Now, this spread, when I was doing it, was trading around $2.40. Not enough credit for me for the $4,700, almost $4,800 in buying power that I'm using. So I switched it a little bit. That's why I said omnidirectional, broken wing butterfly with a twist. Let's take a look at what I have here right now. 90% pop, good positive theta decay of $7 a decay. $1.58 long delta, just under 2. Now remember, SPX is 10 times the size of a trade in SPY. So this 1 or 2 deltas actually equals 10 or 20 deltas or 16 deltas right now in SPY. So if that's too much delta risk for you, if that's too much buying power for you, this is not a trade for you. Max profit on this is almost 1-to-1, meaning I'm risking just about $5,000 to make $5,000. It says $5,225 because that $225 is the credit you receive plus the $5,000 between $4,950 and $4,900. Remember, if SPX goes out, and this is cash settled, meaning there is no stock that you have to worry about, so you could hold this through expiration, which is one of the reasons why we like to put on 0-day or 1-day trades in the cash settled SPX. It is a big product though, $5,000 here. Again, for the $4,700, $4,800 in buying power that you're using. Now, I said it was trading a little bit too low for me, $2.45 at the time. Let's just call it $2.20. So I was able to move it 1 strike. Now I am taking on more buying power. I'm using $5,600. I'm not changing the pop that much, and I was able to get filled at $3.45. What did we learn from this exercise? Well, I was not able to get filled at $2.40 when I put this trade on, trading at $2.20 right now. I was able to get filled at $3.45. So what did we learn here? We learned that 4,900, 49.05 put spread, or maybe all of these put spread, are worth about $1.25 to $1. If you move it up, it's probably going to go up by $1. There, $4.25. There, $3.15. $5.45. So what I did was I moved it, I used a little bit more buying power, and I was able to get filled at $3.45. Now, if you want to see these trades live and in real time, when I place these trades, all you have to do is go to the Tasty Trade platform. I hope you've already moved or transferred your account there. Go to the follow page. Click on Bob the Trader IRA because I'm not allowed to have my own name, but Tom was gracious enough to give me my own picture on there. You will see the 2 trades I talked about a moment ago. We got a quick 50% of credit received on Costco from the podcast trade just done 2 days ago. I closed my Marvell trade while we were doing the show earlier at $2.31. I got $100 in there, run like a thief in the night. You can see here my AMD trade, which has been giving me problems. I was rolling up the untested side. I should have written that in there. I will add that for you. Here's the Costco trade that we originally put on, a very similar trade to what I'm doing here in SPX. So we're going to want, just like Costco, when I put on the trade, it was 709 and change. When I took off the trade, it was 726 and change. We're going to want SPX to rally, and SPX has rallied a little bit since I put this on, about $10. I had my pop of 90%, which I explained to you a moment ago, and $3.45 in credit. Here's my omnidirectional bullish broken wing butterfly in high IVR, meaning the IVR in SPX has been elevated. Why do I say that this is a bullish position? Well, this is a bullish position because if you look at this green line on Tasty Trade, there's no way on the upside that this loses any money. Remember, you collected the $3.45, and your risk is all to the downside. Your break even on this is down around $48.60 and change if you collected the $3.45. Now, when we take a look at what SPX would be down at around that break even, you can see that we're just about going to take out most of this year's move. So for me, this looks like it's a solid trade for the scenario that we have at high implied volatility. You're a little bit omnidirectional, slightly bullish. You're able to use $5,000. It fits your account. How much am I looking to make on this trade? Well, I'm looking to make $1 or $2 on this trade, depending on how it moves. That always takes care of itself. Nobody ever, whenever you lose money on a trade, nobody's helping you with the losses. They're always happy to spend the gains for you. So don't worry about the gains. Let's worry about the losses. What could you do to mitigate this trade? Remember, you're already using this $5,600 in buying power, so you could sell another call spread. If this was going lower, you could sell a call spread above your long strike of 49.50, and you could sell that call spread that's $30, $40, $50 wide and not use any additional buying power on this trade. Whew. All right. I'm Tony Batista for Tasty Live, but you know what I need you to do right now? Open, move, transfer, and you guys have been wonderful for bringing your account to Tasty Trade. We really do appreciate it. It helps us keep the lights on here and also provide not only this podcast, but everything we do on Tasty Live for free to you. Keep us free here so that we can help you there.